investors, and welcome back to Borex Investing. Nebius, ticker NBIS, which is a AI infrastructure upstart, delivered their Q2 earnings this week, and they were very impressive. And the stock price even jumped almost 30% on the news. So in this video, I wanted to give an update on their progress. So this is a company I have strong conviction in, and I have been building a sizable position here for a few months now. I currently own 1,000 shares, but I want to double that position, so I'll try to do that via option trades. But overall, I'm very glad to see the gains here because it's proving my thesis correct. My portfolio year to date has about a 70% return, and it's because of my high conviction stocks like Nebius and Palantir, among others, that I am able to outperform the S&P index by 7. All right, well, first let's start off with some key financial highlights. I'll try to cover what I think is most important here. Most importantly, their revenue increased 625% year over year, and their adjusted EBITDA improved 64% year over year. They achieved a positive adjusted EBITDA in their core AI cloud business and raised ARR to forecast up to 1.1 billion. So they have also raised 4 billion in capital to date and have a very strong balance sheet with 1.68 billion in cash. The core AI cloud business just turned EBITDA positive, so that's huge for a company growing this fast. In Q2, ARR hit 430 million, up from 249 million last quarter, so that's nearly 2x growth in just 3 months. So even with the new capacity coming online, they're still running at near peak GPU utilization. So this is clear proof that there is tons of demand here. All right, let's talk infrastructure because this is where Nebius is going all in, global data center expansion. So they're on track to secure over 1 gigawatt of power by 2026. That's not a typo, 1 gigawatt. For perspective, that's enough to power hundreds of thousands of homes, or in this case, massive clusters of AI workloads. By the end of this year alone, they're expecting to have 220 megawatts of connected power, meaning power that's already live or ready to be flipped on the moment GPUs arrive. Right now, they have 5 active data centers, including major hubs in Kansas City and Finland, both strategically placed and already up and running. And they're not slowing down. New facilities are being built out in the UK, Israel, and New Jersey, plus even more greenfield sites in the pipeline. So they're clearly laying the groundwork to scale globally and win enterprise deals. And speaking of scaling, Nebius is really loading up on GPUs. We're talking a serious ramp in NVIDIA Blackwell and Grace Hopper systems. So this isn't a little upgrade. They're preparing to meet enterprise-grade AI demand for the next decade. So in my opinion, this is really how you play to win in AI infrastructure. So some product and platform highlights. Nebius just launched AI Cloud version 3, and it's a beast. They've upgraded orchestration with Slurm and Kubernetes and rolled out 2 gigabytes per second of streaming storage per GPU. They're also crushing benchmarks. MLPerf shows near linear scaling, and their ISIC 2 system just ranked 13 globally and number 1 in Europe among commercial supercomputers. So again, this is serious enterprise-grade infrastructure. Another highlight is that Nebius is really landing serious clients, whether it's Cloudflare, Prosus, Shopify, plus AI startups like Hagen and PhotoRoom. I mean, Cloudflare runs one of the most secure global networks on the planet, so partnering with Nebius is very bullish for this firm. And they've also expanded ecosystem partnerships with deeper NVIDIA ties and integrations with Anyscale, Base10, Lighting AI, and SkyPi. So they're building an API-first, dev-friendly AI platform, and it's catching on very fast. And we have to remember that there's tons of value in their other business units. So for instance, Triple 10 gained 6,000 new students this quarter, and they launched a new AI automation course. Avride is delivering Uber Eats via robots in Texas and New Jersey. And they're also prepping autonomous ride-hailing in Dallas via partnership with Hyundai. And when it comes to their equity stakes, Jeff Bezos just recently invested in Toloka. And with ClickHouse, there's been a lot more news. So while most of the spotlight is on Nebius's AI infrastructure business, one of the most underrated parts of this story is their 28% ownership stake in ClickHouse, an open source high-performance database platform. So we all know by now that Nebius owns 28% of ClickHouse, which is recently valued at $6 billion. So that means that the ClickHouse alone is worth about 1.68 billion to Nebius, which is roughly 15% of their entire market cap. And on the Q2 earnings call, management confirmed they will not sell their stake unless the valuation rises significantly, potentially unlocking several billions in liquidity. The actual quote was, "The way we're thinking about this stake is that there's a lot of value to be created in the business. But if there were to be a liquidity event in the coming years at a significantly higher valuation, then that's something we'd potentially consider as a source of several $billion." So ClickHouse isn't just a cool open source database, it's a mission critical infrastructure for some of the biggest AI and industrial players in the world. So for instance, Tesla uses ClickHouse to power a system that ingests tens of millions of rows per second, stores trillions of metrics, and manages billions of unique time series. Alan Tao, which is a senior staff software engineer at Tesla, said, "In our opinion, data in ClickHouse is better than anywhere else. No other system lets you slice and dice your data, ask interesting questions, and get answers in an acceptable amount of time." So ClickHouse is already used by OpenAI, Anthropic, Tesla, and many others. So if a liquidity event happens in 2026 or 2027, this could unlock billions for Nebius without selling any core infrastructure. So this is a major hidden asset in the Nebius story that most investors haven't fully priced in yet. So on the call, the CEO really highlighted how much demand there is for their products right now, and I really do think we're in the midst of a once-in-a-generation opportunity here with this firm. AI infrastructure demand continues accelerating, and Nebius is well positioned to be a top independent AI infra player. Obviously, there's risks involved. I mean, this is very high capex intense, and there is going to be competition from hyperscalers, but I think Nebius will be able to maintain their edge in performance, cost, and developer tools. So final thoughts, Q2 was exactly what I hoped for. Flawless execution from top to bottom. The hypergrowth is still there. They're very disciplined in their spending. They raised guidance, the demand is there, and the execution really is elite. They're better, faster, and cheaper than the competition. They're expanding their sales team, they're landing clients like Cloudflare, and they're making it clear that they're coming for the big fish. These guys are enterprise ready, and they're building infrastructure at breakneck speed to capture it all. And let's not forget, their subs like ClickHouse and 1010 are not distractions. They're strategic investments that will either spin out or unlock billions in future value. Their leadership team is locked in, and they've got something most others don't: a world-class, cohesive engineering culture that will compound their edge for years to come. So to me, Nebius really is the lowest risk multi-bagger in the market, and I keep buying this stock because I think it's undervalued, and I think we're very early in the story. So if you want to understand why I have such high conviction here, I broke it all down in my full Nebius deep dive video, so check that out next. I walk through the thesis, the numbers, and why I still think this company is massively undervalued. So just remember, eventually our friends at CNBC and Bloomberg will start giving Nebius attention, and when they do, more institutional and retail investors will buy in, sending this easily to $100 a share. All right, that's it for now. Thanks for watching, and please like and subscribe if you found this interesting. Thank you.